Are you in earthquake area? Are you in fire prone area? Do you have some natural risks? What does your property look like? Are you building sprinklered? How new or old are your roofs? What is the management style? So that's your underwriting element. The other component that puts together with the underwriting element is the value of your property. And what I've seen is that's the largest driver in what we call premium increase.
Welcome to BuzzHouse, a Baker Tilly podcast where you can hear all the buzz around multifamily housing, with all the info you need to help you win now and anticipate tomorrow. Hi, I'm Don Bernards, the partner in charge of Baker Tilly's multifamily housing practice.
And I'm Garrick Gibson, a partner at Baker Tilly, also specializing in consulting on multifamily housing transactions across the country.
Let's get started. On the BuzzHouse, we talk a lot about challenges and hurdles that sponsors of affordable housing are facing. I've heard someone refer to challenges right now in the industry as being the 3 I's, as in the letter I. Number 1, inflation. Number 2, interest. And number 3, insurance. On the interest rate side, of course, we saw this fall the 10-year Treasury over 5% for the first time since 2007, so 16 years, the highest rate in 16 years. Regarding insurance, Garrick and I have heard many anecdotes about significant increases in rates and challenges in even being able to secure insurance in some cases. I'm sure all of you have your own stories. To give some great perspective on where we are in the market, how did we get here, what can we do as an owner and an industry, and other questions, we're very excited to have with us today Ed Malaspina, Chief Executive Officer and President of the HAI Group, an entity that has been in the affordable housing insurance world for over 30 years. Ed, thank you for joining us today.
It's great to be here.
Very good. I can now turn over to Garrick to jump into our conversation.
Ed, welcome to the show. Before we get into our questions, Ed, to begin, would you please tell us and our listeners a little bit about the HAI Group, its history, and what your main lines of business are?
So HAI Group was formed in the late 80s, and we were formed out of a need. So at the time, public housing authorities had a very difficult time either affording insurance or even finding it available. So they decided that if the standard insurance markets weren't going to provide the products and services that they needed, they were going to start their own insurance company. And that's when we started.
So Ed, thanks for that quick intro. Would you be able to give us some background and context of what has been taking place over the past few years, which is leading what seems to be like a really significant premium increase and also seemingly more difficult to find coverage around both the construction and the ownership portion of affordable housing? And also, have there been any other times in recent memory where we have had similar conditions aligning for a jolt to the insurance market, or is this somewhat unique?
So this is really not unique. And this is why and when we were formed, we call it a hard market. So at the time, it was, as I said, hard to find or very expensive, if you can find it at all. We saw this again after 9/11, that insurers and reinsurers tightened up their capacity. The carriers kind of battened down the hatches and said, well, wait a minute, we got to take a good look at this. What is our total possible loss? And it could be real now. So we go back in the late 80s when we started. That was a hard market, capacity and price. We went to early 2000 to the 9/11 event. That was a hard market. And we're actually in a hard market again right now. It's like when there's a perfect storm and usually triggered by a catastrophic event. And it sends kind of a tremor through the insurance industry. And what people don't realize is largely insurance companies purchase insurance for themselves as well. And that's called reinsurance. So ultimately, the insurance company buys insurance and has to have reinsurance to protect it for all the big losses. But if those reinsurers don't have capacity to provide that protection at those upper layers, then you don't have the ability to provide the insurance at the lower layers. So what I've seen is largely the issue is about property insurance. So we here at HAI Group provide a number of different kinds, property and casualty and auto, but property seems to be the issue's top of mind right now. Let me give you a really slimmed down version of what's happened with property insurance. So there are really two basic components of how your property insurance premium is developed. So there are two basic elements. One is rate, and your rate is based on a few things: your loss history, your risk factors, like are you a coastal property, which we call tier one? Are you an earthquake area? Are you in fire prone area? Do you have some natural risks? What does your property look like? Are you building sprinklered? How new or old are your roofs? What is the management style? So that's your underwriting element. The other component that puts together with the underwriting element is the value of your property. And what I've seen is that's the largest driver in what we call premium increase. So premium increase is not to be confused with rate increase. I can tell you that our experience and the experience that I've seen from other carriers is that the rates have gone up, but not a lot. The premiums have gone up considerably. And that's a reflection really of your building values. So if you go back 5 or 10 years to your building value, you may find that it's up 50 or more % in value. And what does that mean? That means largely that in order for an insurance company to replace your building, it's much more expensive today than it was 5 or 10 years ago. And when I say that, let's take a look at some of the reasons why. So a sheet of plywood may have been $17 and then it's $53. The cost of fuel, the cost of hourly labor, if you can find labor, right? The cost of other building materials, transportation. So there's so many things that add up to say, you know what? In a scenario in which we were to have to replace your building, it's going to cost a lot more today than it ever has. So we look at that. And I found that as I look back at premium increases, definitely the lion's share of the increase has to do with the fact that your building is just a lot more valuable today than it ever was.
Oh, that was a great perspective. And just staying in the current market, kind of based on that great background. Again, so much discussion. The reason you're on, we invited you to today's show is just there's so much discussion around insurance. And of course, there's a hearing at the Senate Banking Committee in September. A lot of you are familiar with National Church Residences, and this is just a quote I read from Michelle Norris. She testified that, quote, "We have seen our property and casualty insurance costs increase 400% in 6 years. Even developers and owners with very large portfolios like ours have little bargaining power in today's industry," end quote. Again, your comment gave great perspective on replacement costs, Ed. Is the affordable housing industry especially hit compared to other asset classes, other insurable industries and so forth? Any insight there?
Yeah, so affordable housing is, I think, finding it a little bit more difficult than the other areas of insurability. But when you look at why and what drove this, so if you have a business portfolio of, again, a lot of at-risk or coastal properties, it's going to drive it. We've seen, let's see, year to date, we've had 23 billion with $1 billion events recorded, and that was reported by NOAA, the National Oceanic Atmospheric Administration. So far this year to September of 2023, we've had $23 billion losses in properties. So the insurance companies can only take so much. And while it might not affect the masses, the basic principle of insurance is sharing. So we all go in together to buy insurance and a few may need coverage. But two things can offset that balance. One is severity and one is frequency. So if there becomes lots of claims, that's going to be an issue for the carriers. Or if there are a number of large claims. So in this case, what's triggering this hard market, in my opinion, is the severity of these claims.
Thank you very much for that, Ed. Getting back to the kind of micro level, just thinking if I'm an owner or developer of affordable housing, what can I best do to position myself when going out to get quotes for the next policy year?
Right. So there are two facets to this. The first is what physically, practically can you do? So the physical elements are this. Risk management is paramount. And what comes under the umbrella of risk management? A lot. The first is inspect your properties. Take a look at what could give rise to a loss and try to correct it, prevent it. Listen, there are some things that you find you cannot fix, remove them. If you have old playground equipment and it's scheduled to be demolished or replaced, get it out of there. If you have a building that's scheduled for demo or dispo, get it out of there, take it down. So One way physically you can do is remove it, add fire suppression canisters above the stoves, and that can help with fire loss. So physically, there are a lot of risk management activities you can do. Now, on the business end of it, what can you do? Some basic things. First of all, you can increase your deductible. Second of all, you may be able to lower your limit. You may be able to change your coverage terms and conditions. But if you do any of those things and start modifying the financial part of the insurability of your property, you should have really good fiscal discipline. And what I mean by that is set up a fund, put some money aside so that if you do in an event have to pay a large deductible or come short on a loss limit, you have something as a backup.
Thanks for that, Ed. At the macro level in the affordable housing industry, are there ideas we need to be talking about with our elected officials?
Yeah, actually, there are. So insurance companies are well aware of areas of the country that are very litigious or seem to have settlements and loss claims and through the court system that don't make sense. And they're called judicial hellholes. And you can look that up. It's an actual term. And a lot of times carriers try to avoid situations in which they're in a state that is not very fair or favorable in their eyes, right, to a certain claim. And I'm sure the states struggle with that very difficult balancing act of saying, how do we act in the name of consumer protection, yet keep business active here? So I've seen some states that have gone just too far. And what happens is the carriers will leave. A few carriers will go bankrupt or have difficult financial times. They'll start leaving and the rest are soon to follow. So sometimes the scale can tip too far in the consumer's favor, and that can be a problem. So keep an eye on your legislative activities. While I think the consumer might say, well, this is great, I think you got to give it a second and take a look at it from the other perspective and say, is there going to be anyone left that provides insurance to the people of the state?
Yep. Great observation. And maybe one last question for you, maybe on a more positive side, not that it's been negative, but we've known HI to be extremely innovative, probably since its inception. There's always thinking about new products or what can we do, and any types of big picture things you're thinking about, new trends or innovative products, or what's on your mind the next year, a couple of years? Yeah.
So some of them are new, some of them are not so new, and some of the new ones are exciting and some can be scary, honestly. So we have traditionally, again, the fire suppression canisters, water sensors. So one of our biggest losses is the water damage following a fire. A fire might have X amount of damage to the structure, but the water in the sprinkler system has X plus Y amount of damage, right? So do you have water sensors? So some properties have pipes burst and they're unaware of this. And if it's a high-rise building, the mechanicals are generally in the basement. So those are the first things to go. Also, if you have an elevator and the pipes burst anywhere in the structure, usually the water will find its way down that elevator shaft down again into the mechanicals. So water sensors are great, CO and smoke, suppression canisters, but the newest thing that we're looking at is cyber. So while it doesn't fit necessarily your building, cyber is another risk that's making it right to the forefront of concerns, not only for carriers, but I think for everyone. And we offer a cyber center in which we provide one application. And while we don't provide the insurance, we farm it out or we look for other carriers that would be able to maybe provide you with a quote. And even if you don't find something you like, you'll learn from the process because many of these applications include an evaluation of your practices at your agency. And they may say, you need dual factor authentication, you don't have this, or we tried to hack into your system and got in. So even the application process is informative, but I would say cyber is one of the up and comings, or actually it's here.
Very good. That's it for today's episode of the BuzzHouse. A big thanks to Ed Malaspina, for Chief Executive Officer and President of the HIA Group, for joining us. Give us an overview of where we are in the insurance space around affordable housing. Thanks again, Ed. Appreciate it.
Thanks. Good to be here.
Once again, I'm Don Bernards.
And I'm Garrick Gibson. Don't forget to subscribe so you don't miss an episode. For additional resources around multifamily housing, check out bakertilly.com. If you have a suggestion for the show, email us at build@bakertilly.com. That's BUILD at bakertilly.com. See you next time on BuzzHouse.